Hi everybody, I'm Michael Reinking coming to you straight from the floor of the New York Stock Exchange with your weekly brief. As a reminder, it's for informational purposes only, and the NYSE does not recommend any investments or investment strategies. So yesterday marked the 2-year anniversary of the market bottom post-COVID, which was preceded by the sharpest and fastest bear market in history, where the S&P 500 fell 35% in 20 trading days. Now from those lows, we've rallied about 105%, and from the highs prior to that sell-off, we're up a little over 30%. So a pretty impressive 2-year return profile by any standards. Now we are in the midst of kind of the deepest and most prolonged pullback since the start of that rally, as the S&P had fallen about 15% peak to trough through the beginning of this month. However, we've cut those losses in half starting last week, and this week we're posting some modest gains with today's rally, as the S&P 500 is kind of hovering on either side of its 200-day moving average. Now that return, though, is actually pretty impressive if you consider the fact that oil prices have rallied over 10% this week, with ICE Brent back around $120, and we've continued to see yields move sharply higher. Now this week, we've seen Fed officials get more emboldened in their calls for a 50 basis point rate increase at one or more meetings this year. The 10-year yield is up about 50 basis points this month alone, and we're looking at futures markets that are pricing at about a 65% implied probability of a 50 basis point rate increase at both the May and June meetings at this point. Now this morning we got some mixed economic data. The S&P Global Flash PMIs in Europe and the US both came in ahead of expectations. There was some deceleration in Europe, and we did see the prices component move to record highs. In the US, though, we actually saw an acceleration. And in a positive data point, manufacturers said that they were able to increase output this month due to supply chain issues easing and hiring, which could potentially be, if we continue to see this, a positive data point related to inflation. Now, durable and capital goods orders missed, but initial and continuing claims both hit record lows since 1969. So the economic backdrop continues to be pretty positive. Now, President Biden is in Europe, so be on the lookout for some additional geopolitical headlines. And then it gets a little bit quieter as we head into kind of month and quarter end starting next week. So there could be some portfolio rebalancing. U.S. consumer confidence is going to be on Tuesday, but Thursday is a big day of economic data. We have China PMIs, Eurozone CPI, personal income and spending, and then the Fed's preferred gauge of inflation, PCE, on Thursday. And we cap the week off with the ever important employment report. And of course, tonight, the start of the Sweet 16, so make sure to enjoy some college basketball this week. I'm Michael Reinking, and this has been your weekly brief.